Hi everyone, this is Gary. Hope you're doing well today. I wanted to take a few minutes and take a little bit deeper dive into showing you how the edge strategy works. The leverage edge strategy, I think, has been pretty well explained with some of the videos that I've already done as far as how it performs and what it does, that kind of thing. But I'm not sure I've done a very good job of explaining how it actually works. And so that's the intent of this video. I want to show you some of the power, some of the flexibility that is available with the edge strategy. What we have here is a TradingView chart, and in this case, I'm showing the TQQQ. And on the chart, we have the leveraged edge strategy in this area right here. I have utilized the replay function in TradingView, so I've moved this back to look at a date in the past. I have it set right now for January 2nd of 2020, and I'll explain why in a couple of minutes. But first, I want to explain that there are actually a couple of different versions of the edge strategy. There's a daily version and a weekly version. Now, both of these run on a daily chart. So when you bring up TradingView and you use TradingView, you're always going to be looking at a daily chart. Never a weekly, never an intraday. It's always going to be daily. But the strategy works using stochastics. These are custom stochastics that we've designed in addition to specific rules that between the two of them will generate signals on the chart and the strategy as to when to buy and when to sell. And the different versions of the strategy, the daily and the weekly, have a little bit different characteristics. And I'm going to show you what those are in a minute. But before I get into that, this is how you get to the settings for the strategy. And in this particular case, we're going out weekly, and these are stochastic settings. And we're saying that we're going to use a trailing stop of 35.5%, a PD stop of 12.9%. And what that means is that if the strategy is in a buy and the price falls 12.9% or more from the prior day close, it's going to stop out. It's not like a typical stop based on a buy point. So it's based on the prior day close. So it's a little different. We have a profit target, a percentage set for 33.6% for the weekly version of this. And right now I have it set to do a back test from the beginning of 2020, January 1st, to the beginning of 2021, January 1st. And I'm going to show you a little bit more on how we get here in just a second. All of these settings come from a spreadsheet that we generate called Best Settings and Results. In this particular case, I'm showing a 6-year period of backtesting and settings for that. Now, here are the settings for the daily in yellow headings here, and weekly here in sort of a greenish color. But these two columns here are all for the daily. So the top portion is the settings, and based on not using an additional indicator to help us filter out bad trades, we're looking for the strategy over that 6-year period, and the date here is December 24th of 18 to November 15th of 24, to provide a net profit result of $812,607 using 183 trades to get there. Now, if we add on an additional indicator, that is going to change, and that's going to bump up to a little bit over $1 million and 171 trades. So we reduce the number of trades and we get a better result. Usually that's because the additional indicator that we use, a lot of times it's moving average convergence divergence, MACD histogram. Other times it's the moving average on a slope, and sometimes it's a different indicator. But there's only a few that we use repeatedly, and they do a pretty good job of filtering out bad trades and reducing the number of trades and bumping up performance. But you'll see that in this case, we used it here, the moving average on slope indicator. But when we go over to the weekly version, here we look for a $350,000 net profit without an additional indicator. But if we add on the MACD histogram additional indicator, we're looking for about $712,000. Now you'll see that there's a lot fewer trades here, 40 trades and 36 trades versus 183 trades and 171 trades. So generally speaking, I think you could say that the daily strategy will typically provide a little bit better performance, net profit performance, but at the cost of a higher number of trades than the weekly version, which might not quite give you as high a performance level, but certainly a lot fewer trades throughout a time period. And over 6 years, that's pretty good. Not a lot of trades over a 6-year period of time. So I generally recommend that people use the weekly version of the strategy, particularly new members who are learning it, before they consider moving over to a daily version of the strategy. Now, I want to show you kind of how we get there. I've created a spreadsheet here showing a comparison of the TQQQ daily version of the strategy to the TQQ weekly version of the strategy. And I did this on a year-by-year basis, so it's as if you had started the 2019 year in January and said, I would like to start trading this strategy now. If I do that, what's going to happen? And in that particular year, it would have generated 14 trades for the daily strategy, had a max drawdown of about 11% and 103% return, compared to buy and hold of 84% and a max drawdown of 32%. Now, notice that I've got dates over here as to when the backtest dates actually ran. So the backtest ran, in this case, on the daily from 2/12/19 to January 2nd of 20. And because of that, we're going to use those same dates to establish the buy and hold performance and drawdown for a comparative basis. So based on those dates, this is what the buy and hold did. Now, the reason I point that out is because you're going to see a little bit different dates on the weekly. The weekly backtest dates go from January 4th of 19 to December 13th of 19. Had 5 trades and a 7.7% drawdown with a 136% net profit compared to the buy and hold of a little bit over 119%. So that 119% is different than over here, this one on the daily, because of these difference in dates that the backtest was actually run. So when we compare the strategy performance to buy and hold, we want to do an apple and apples type comparison. So we're going to run it for the same time period for both. The chart we're going to look at on TradingView, we're going to look at the 2020 year. And I want to point out to you that in 2020, the daily backtest, the first trade started February 4th, where on the weekly, the first trade started April 3rd. So there's a considerable difference here, and that's going to be reflected in the performance for both the strategy and the buy and hold on both the daily and the weekly. So I'm going to move over to the strategy on TradingView now and show you how that compares. And right now, I have this backtest set for the beginning of the year, ending at the end of the year, just to show you how this shakes out. So using the replay function of TradingView, we're going to start out here on January 2nd of 2020, and this is the weekly version of the strategy that we're doing first. So there's going to be fewer trades using this particular one. And I'm going to run through this manually to move it along a little bit quicker than it would just using on playback with replay. So moving it back manually, one at a time. Again, this is a weekly. We're not in a trade. We're in cash because it's the beginning of the year. We just decided we're going to use the strategy and we want to get in using the strategy. So we're looking for a new buy signal. It's moving along. Prices keep going. And we're still in cash. And the market is dropping. The market is dropping more and more. Yeah, everybody I'm sure remembers 2020 and the big drops that we had in 2020 as far as how the market dropped. All right, and here we're starting to move back up, it looks like. We're getting into April. And here's our first buy. And our first buy is on April 3rd of 2020. So that's when we would be getting into this particular trade. That's our first trade. Now we're in the trade and we're going to move along and we get up and reach our profit target of 33.6%. So at this point we would be selling at the end of the day, and if the conditions are still good, the next day we're going to rebuy. And we do rebuy the next day. We get back into the trade and we keep going. Oh, we reach our profit target again. And after we reach the profit target, we do get back in again. We rebuy. And we're still moving along. That is our second profit target, I believe. And here's our third one, third in a row, 3 profit targets in a row. Notice how we, draw. I mean, this happens a lot, but we'll reach a profit target and it'll kind of max out and the price will drop the next day. It's amazing how often that this actually happens. And I think that's part of the reason why the rebuy the next day adds to our profitability on the strategy, because we rebuy at a lower cost the next day and we're back in the trade again. We keep going and we reach another profit target. I think that's our fourth, and a rebuy, re-enter the trade. And I think that's our fifth one, profit target in a row. That was a huge year, 2020. And we rebought the next day. We're back in it. We get stopped out right here. So right here we got up to a max and we dropped that 12.3%, I think, for the PD stop. 12.9% was the PD stop. So from here at the high, we dropped, or from the close, I should say, we dropped 12.9% and we get stopped out. And so now we are in cash. And it's a good thing because we keep going down. You're still in cash. We're back in the trade again. We bought back in, and this is on October 9th. We bought back in. and we exit right here. It's called a cross under level exit. So we lost a little bit on that trade, but after hitting the profit target about 5 times in a row, we're still up a lot on the trade overall for the year. So anyway, we exit here. We're back in cash. There we go. And we buy, looks like right here, we get back in with another buy. And here we're coming up to the end of the year now. So we're up to December 30th. Now, we're still in the buy from this date, okay, from this date of November 6th here, okay? We're still in the buy. So my point is this, is that that makes it difficult when we're trying to do a back test and show you comparative results on how things compare, because TradingView won't give us, the status at this point as to our profitability on the trade. Instead, what they do is I'm going to show you the strategy tester down here. They have a section called the strategy tester, and that coincides with the dates that we put in here as far as our backtest date, start and end date. So that's going to calculate number of trades and net profitability over that period of time, but it becomes a challenge for us because some of our trades will extend through the end of the year into the next year, and that becomes difficult. The other thing is that we have trades that are kind of extended trades, meaning that when we do a rebuy after a profit target sell and we rebuy, TradingView doesn't look at that as a new trade. Rather, they look at it as part of the same trade as far as continuing on from the standpoint of calculating a backtest net profit results, and that makes it a little bit more challenging. So when I bring up the strategy tester, I'm not going to talk about the overview right now. Instead, I'm going to go right to this list of trades. We can see all the trades that have been made with this since we started. Remember, we started April 3rd. That was our first trade, our first buy, and we reached our profit target on April 9th. Well, here's each individual trade after that took place on this chart. And each one extends down, and you'll see how if we get a profit target reached, it goes to the reentry buy, and then in this case we hit a PD stop, and then a reentry buy, etc., and then a cross under level exit, etc. Well, we don't actually get TradingView looking at this as a new buy from a calculation perspective until here, which is around October 9th, when we actually have a straight buy signal. And that, like I said, makes it difficult to calculate. So at the end of this, we had a buy on November 6th, and through December 22nd, we're still in the trade. And I just showed you up here how through the end of the year, we're still in the trade. And that's going to continue along. I want to show you that from a slightly different perspective. Before I do that, though, I want to tell you something a little bit more about the actual trading that you might be doing with the leverage edge strategy. And as I move through the replay bars and showing what is happening as far as different signals, if you were trading this and following the signals, whatever signals you have in the settings, as the signals come up on the chart to buy here, you'd be buying at the end of the day, at the close of the day. That's when the chart and the strategy shows the actual buy. Now, once you know and understand the rules that the strategy operates by, it becomes fairly easy to anticipate when those signals are going to happen on a particular day. So you know ahead of time that it's very likely you're going to get that signal at the end of the day, and you can prepare to make that trade. And this gets easier to do and easier to recognize as time moves on. It's even easier when you look at things like profit target reached, because you can make a note on your chart knowing that your profit target is 33.6% higher. Yeah, you can make a note on your chart where you bought, and so you know where you're going to hit that profit target. And you can even put in a stop order, a buy stop order there, or I'm sorry, a sell limit order there, to get out of the trade at that profit target reached point. And that is a lot easier to do. And when you do the reentry buy, you'll be able to tell based on the conditions, because you know and understand the rules, that that reentry buy is going to happen at the end of the day. So you'll be prepared to place that order at the end of the day. In any case, my point is that you can anticipate most of these things that will happen ahead of time, and therefore you can be prepared to place your trades with your broker in a timely manner. Now, for some reason you don't get a trade in at the end of the day, there's a couple of options. One is you can make your trade in after hours, or failing that, you can also just do it at the open the following day. So there's a couple of options there. The harder thing to anticipate is if you get a PD stop, because if you get a PD stop, obviously you've had a bad day and the price has dropped significantly to hit your stop from the prior day close. The best way to handle that, and what I recommend, is every day, that you're in the position, look at what the closing price is, and then calculate what that PD stop price would be, sell price, and place an order, a stop loss order at that level for that PD stop the following day. And then you're going to need to change that every day, because the closing price is going to change every day. So that's the way that you can use the signals and trade the strategy efficiently and effectively. The key here is, what changes you might want to make to the strategy settings that more reflect your particular trading style, your goals, and your risk tolerance. So if we look at, I'm going to end the replay because we've gone through a lot of these trades on the weekly now. I'm not going to try to show this to you on the daily. The daily is very much the same thing, just a lot more trades. So things happen a lot quicker, and you've got a lot more activity going on a daily than you do on a weekly. But I'm going to end the replay here and end that. And then I want to just go back to where we were in that particular time frame. So I'm going to go back to April of 2020 time frame to where we were. And now I want to get back to where I left off before, as far as the list of trades and the back testing and how that works, because this is a easier way, I think, to understand what's going on. So right now I have the start back test at April 3rd and the end date at October 30th. And If you remember on this spreadsheet, those were the dates that I had for the weekly here. And based on that, we're looking for a 267.3% P&L, 267.3. And that is exactly what we have down here under this total P&L, 267.3, well, 0.31. I always round it off to the nearest tenth. But my point that I want to show you is a couple of things. One is that right now we have on the list of trades, you will see that our ending trade should be on October 30th. So if we go to the list of trades, the last trade is on October 30th down here with a cross under level exit. So what happens is if we try to do a backtest that was on more of a calendar year type basis, and we extended this, let's say we even extended it just into November. Let's say we move this out to November 30th to see what happens. If we move the end backtest date out to November 30th, now we go to the last trade, and what happens is it actually captures a trade that is a buy on November 6th, and it doesn't get out of that trade until January 21st with a profit target reached. So what happens is if you are trying to calculate the backtest and do a comparative type thing and look at this, you'd look at the overview, and now we have a backtest total P&L of 390%. So, and the reason is because that's the total through the end of January when that last trade ends. And that's going to throw it off if you're trying to do a comparison on a calendar basis. So that makes it very difficult. So that's why we have to look at what is the trade that ends prior to that within the calendar year that makes sense. Hopefully, it's at least fairly close to the end of the calendar year. But when we're doing the weekly trades, a lot of these are spread out quite a bit because there's not a lot of them during the year. In that particular case in 2020, we only had 7 trades throughout the entire year. So that's roughly one every couple of months. So there's not a lot of trading. The other thing I wanted to point out is I'm going to move that date back to October 30th. All right. And now we're back to that 267.3% P&L. Now, the other thing is, like I said before, we encourage you to try different things with the strategy settings because, number one, even though we've done hundreds of back tests trying to find optimal combinations that will give us really good results on back testing over multiple time periods, there's no guarantee that we've actually made it or figured out the absolute best thing as far as net profit performance. But even then, that may not be the best thing for you because you might have some issue with waiting until you get to 33.6% to take profit. And you might want to be taking your profits a lot earlier at maybe, let's say, 20% instead. So what happens if you change this profit target percentage to 20 is I just changed it to 20. Now look what happens to the total P&L. It drops down significantly to 55 from 267. That's a huge drop, okay? But what you can do is you can move this up gradually to see how if you move up on your profit target, how that changes the total P&L percentage and gains, and see if you can find something that is more tolerable for how you like to trade or more in line with how you like to trade. I'm going to move this back to 33.6 for a minute. And the other example I want to show you is, let's say that you're not happy with a almost 13% PD stop, because a 13% drop, almost 13% drop from the prior day close is a pretty significant drop. And you may not want to tolerate that. That might be too much as far as your risk tolerance. And you might feel like a 9% might be about the max you'd want to go, as an example. So let's change that to 9 and see how that impacts the P&L. Well, again, another significant drop down to 48%. But you can toggle this up, increase it gradually to try to find a stop percentage that you think is tolerable for you, yet gives a reasonable P&L result. All right. So that's what we mean by trying different things with this. Don't be afraid to try different things to find a point that is going to work for you. Unfortunately, in this case, we got to get up to close to 13% or 12.9% to make it to that 267.3. You might prefer a less of a trailing stop percentage. You might want to try some different settings on the stochastics to see if you can get greater performance out of the strategy as far as net profit. You might decide that you want to try some different things as far as the buy and sell range, and that's going to impact that, and of course the exit level. Changing those different kinds of settings is going to impact not only the P&L, it's going to impact the total number of trades. All right, so as you go through changes, you'll see how different changes impact the P&L and the number of trades almost instantly. And that'll give you a sense of, are you going the right direction or not? And are you getting things in line with how you like to trade? The other thing I want to point out is that when it comes to drawdown, if you have a trailing stop of 35.5% set in this as a stop, that's your max drawdown, really. That's 35.5% from the highest point, prior point on the chart that you're going to drop before you get stopped out. So that's going to be your max drawdown is 35.5%. I'm pointing that out because that is one of the huge advantages of the strategy is the lower drawdown compared to buy and hold. And the nice part about this with the trailing stop is you know what that's going to be ahead of time. You know how bad that could get. So those are a couple of things extra things I wanted to point out to you as far as how this worked. And then the other thing I wanted to mention on this spreadsheet that you're going to be using to help you as far as with starting configurations is that there are a lot of different settings that we have available on this spreadsheet. So I just reduced the size of this to give you a sense, but in many cases we have two settings for each leveraged ETF, and that is because there's normally, or quite often, I should say, a daily and a weekly setting for both. But there's quite a few different ones, and what is here is not only the settings, but down below that is what the actual input page looks like, or that input on right here, this thing, looks like. So we've got the input here, all these different settings, and that is actually in the spreadsheet. So you can see what it looks like on this and easily match it up for the input and the properties tabs. so you can very quickly make sure that you've got the right settings, as well as, of course, matching to the net profit results. But like I said, there's quite a few of these available, quite a few different symbols that we provide settings for. And that is another huge advantage of this strategy. It's not limited to just a couple of 3x leveraged ETFs. There's quite a few that we found some really good results that can be generated with the leveraged edge strategy. So I think that I've covered everything as far as using the strategy. And the part that is not in this presentation is the rules, and that will help you really understand better how things come together. But that's, again, part of the membership. So we hope you will consider joining and obtaining the strategy, and wish you much success with it. A lot of our guys are having some good success. Of course, that's all dependent too on a reasonable market. But with that, I will wrap it up and say thank you very much. Bye now.